Take a look at your wallet, or better yet, look at the banking app on your phone. Most of us think we understand money because we use it every day. But here's the cold, harsh truth. The financial system you were born into is effectively dead. Welcome to TradingBits X. This channel is all about decoding the economy from the ground up. No noise, just signal. We're currently living through the most significant architecture shift in the history of value since the invention of the double entry bookkeeping in the 14th century. We aren't just changing how we pay, we're changing what money actually is. By the end of this video, you'll understand the three pillars of this revolution: digitalization, automation, and structural redistribution. If you don't understand this, you aren't investing. You're just guessing in a game where the rules have already changed. Before we dive in, I have a question for the skeptics and the believers alike. Do you think physical cash, paper and coin, will be completely obsolete in the next 20 years? Type cash is king or digital only in the comments below. I'll be jumping there to see your reactions. Digitalization, from thing to code. Let's start with digitalization. Most people think we're already living in a digital world because we use credit cards. That's a mistake. Credit cards are just digital representation of a legacy analog system. The future is programmable money. Imagine a world where money has logic embedded into it. We're moving from passive balance to smart contracts. This means money only moves when certain conditions are met, without a bank, without a lawyer, and without the middleman taking a 3% cut. We have three main contending in this space: stablecoin, private companies pegging digital assets to the dollar, CBDCs, central bank digital currency, the government version of Bitcoin, but with more surveillance. Decentralized assets like Bitcoin or Ethereum, which operate outside the fence. The digitalization of money make it borderless and 24/7. The 9 to 5 market hours are an 18th century relic. Why does the stock market closes on weekends? In the future of money, the market never sleeps because codes doesn't need to rest. If you're finding this breakdown useful so far, hit that like button. It helps the algorithm show this to more people who need to hear this wake-up call. And if you aren't yet, subscribe and turn on the bell. We're building a community of thinkers here, not just traders. Automation, the rise of the algorithm markets. If you think you're trading against a guy in a suit named Gordon on Wall Street, you are mistaken. You're trading against a black box in a basement in New Jersey that executes 10,000 trades in the time it takes you to blink. Over 80% of daily trading volume is the algorithm. This machine doesn't have gut feeling. They have it if-then statements. The good news, markets are incredible, efficient and liquid. The bad news, this creates flash crashes. When one algorithm panics, they all panic. So where does that leave you, the human? It means your edge can no longer beat speed. You will never outclit a machine. Your edge must be the time horizon and psychology. Algorithms are programmed for the microsecond. Your advantage is decades. While the machines are fighting over pennies in the volatility, the successful investor of the future is the one who understands the structural trends. Let's get a pulse in the room. Do you trust an AI to manage your entire portfolio, or do you still want a human making the final calls? Common AI or human? I'm curious to see where the trust lies. Structural changes. The great reset of ownership. Finally, let's talk about the structural changes. This is the big picture stuff. We're moving forward to the tokenization of everything. In the past, if you wanted to own a piece of a $50 million office building in London, you need to be a multi-billionaire. But in the future, that building will be tokenized into millions of pieces. you can own $100 worth of that building, receive your rent in real time, buy a smart contract, and sell your share on a global exchange on a Sunday night. This is the democratization of assets. We're moving away from centralized control, where a few banks decide who gets credits, closed markets, where you need a specific broker to buy specific stock. But with this freedom comes a new responsibility. When there is no bank manager to call because you lost your password or fell for a scam, the burden of security is on your own. The future of money is permissionless, but it's also unforgiving. The biggest risk you face in the next decade isn't a market crash, it's obsoleteness. It's trying to solve 21st century problem with 20th century mindsets. The future of money is digital, it's automated, it's decentralized. You don't need to be a coder to win, but you do need to be a student of the game. If you found value in this, please share this video with one friend who still thinks crypto is just a fad or that banks are the only way. Let's help them see the bigger picture. Now, all this talk about the future is great, but it leads to a very fundamental question. If the world is changing this fast, what does it actually mean to invest anymore? Is buying a token the same as buying a stock? Is there a difference between a smart bet and a reckless gambler? That is exactly what we're diving into the next video. What is investing? We're going to strip away the jargon and look at the core of wealth creation. You don't want to miss that. Click here to watch it or check the playlist. As always, stay curious, stay disciplined, and remember, money, markets, we're trading the future. See you in the next one.